Just starting with the idea, asking the question, how do I, instead of can I, like, can I find cash flow? No. How do you find cash flow? That's a great question.
Are we analyzing for 40 years of rent, or do we analyze for the rent in the first year you buy it? If it doesn't work, we throw it on the heap and we look for the next property. And then those properties trade hands every 2 years because nobody ever makes it work in there. And what people who don't understand this do is they just analyze 900 deals and hope that they like find gold, like the gold miners, shaking their pan in the river. Nope, there was no gold nugget in that one. Let me just go do it again.
Now, instead of 3 units on one property, I've now got 4 units on one property. And now I CPR'd it and I have 8 units on one property. And I live in the 1 bedroom in one of these units and I have 7 other units here in Hawaii. Would that likely cash flow? Yes. What opportunities do you see in the future, in meaning like macro scale? Like what's going to work in the future that you think real estate wise?
I'm more worried about if you don't get real estate now, you may never get it. There may come a point where only wealthy people own real estate, and we get to a situation where what you own is what you're going to have. If you're good at investing in real estate, that's the only place to put money, period. I think BRRRR is one of the only things that works in today's market. It's very difficult. The people that criticize BRRRR are usually criticizing the fact it doesn't cash flow at the end. You're not criticizing BRRRR, you're criticizing buy and hold real estate, period. A lot of stuff is not cash flowing like it was. The metric that I use when I'm looking at how to make money in real estate is there's 10 different ways that you actually make money in real estate. One of them is buying equity. That's buying a property below market value. One of them is forcing equity. That's adding value to the property. One of them is market appreciation equity. That's buying in a market that is more likely than the surrounding markets to go up in value. One of them is natural equity. That's buying property and the value going up because the country printed a bunch of money, right? If you get the right timing in the economic cycle, you buy in the right location, you buy below market value, and you force value. If you make money in those 4 ways with the BRRRR deal, you've already done really well. Now, is it going to cash flow at the end? Hopefully it comes close. But if you bought a property in Austin right now that lost you $300 a month in one of the best neighborhoods that you can find, and rents are going up by $100 a month in general in Austin, Texas, did you buy that property to own it for 1 year? Who buys real estate and they plan to own it for 1 year and then just let it go? Does anyone do that? How long do we intend to hold real estate for? Forever, right? So let's take forever and say that's a 40-year period of time. Are we analyzing for 40 years of rent, or do we analyze for the rent in the first year you buy it? If it doesn't work, we throw it on the heap and we look for the next property. Does that make any sense to do, to analyze for year 1 cash flow when you intend to hold a property for 40 years? But when you do that, what happens is it sucks you into the D-class neighborhoods where you really should never be investing at all because year 1 rents look really good. You get pulled into this spreadsheet magic is what I call it, that it looks like it's going to perform. And then those properties trade hands every 2 years because nobody ever makes it work in there. What if you just took a 40-year approach at looking at what are cash flows going to be? Can I survive losing $300 a month, then $200 a month, then $100 a month, and then breaking even? And in year 5, I'm profitable, but my property has appreciated by a significant amount because supply is constricted in Austin. Demand continues to increase. Wages continue to go up. Jobs continue to move there. You then look like a genius in year 10, where the people who told you that you were a fool for buying it. Again, I'm not saying be reckless with cash flow, but if you BRRRR properties in markets like that and you live financially responsibly so that you can bear immediate gratification being delayed, you're gonna become very, very wealthy. It just isn't the way that this has been taught for so long. It feels like, do you feel dirty hearing this? Like we're doing something terrible telling people this message?
Well, I just look at it from a slightly different approach, and I'm not saying you're wrong in any way here. I'm always pushing people to ask the question, how do I get it to at least break even or cash flow? Imagine this. In Hawaii, you can buy a house and you can put on potentially 2 ADUs. Imagine you build or you buy and renovate a house, and you build or renovate that house to be an unofficial 2 units, or maybe even 3 units, where you have some, I mean, it's all legal. I'm not saying do anything illegal every time. Put a door lock in this one section because you're designing the house, you're building it. So you put a door here that closes off this section from this section. So now I can rent it. Now, instead of 3 units on one property, I've now got 4 units on one property. And now I CPR'd it and I have 8 units on one property. And I live in the 1 bedroom in one of these units and I have 7 other units here in Hawaii. Would that likely cash flow? Yes, there is a way to make that work, even on a new construction, new build, because I started with the idea saying, how do I get this to make money? Again, not easy. They don't like to give CPRs. It takes a long time. The permits are annoying. There's a lot of things here, but just starting with the idea, asking the question, how do I, instead of can I, like, can I find cash flow? No. How do you find cash flow? That's a great question. So if you, I guess on the small scale, I would love to encourage people that way, but thoughts?
So I like, if you're saying it, you want it to break even, that puts pressure on you to do what you're describing.
Yeah.
To be less comfortable, to do more work, to figure out how to maximize the highest and best.
And that means you might have to manage the property yourself potentially on an Airbnb, even paint the unit and do all your own drywall. I don't know, like if you can't afford to just buy and wait, which is what you're saying.
That's the only way I'm seeing people make money in today's market, is they have to be creative like that. You have to understand the fundamentals of real estate. You have to look at a floor plan and be like, it doesn't need this much space in this area. I could put up a wall and I could make a separate unit over here. We do that on the David Greene team. I'm doing this for people that I'm giving advice. You won't go find something that's just turnkey, pretty right out of the box that you can say it's going to cash flow. And what people who don't understand this do is they just analyze 900 deals and hope that they find gold, like the gold miners, shaking their pan in the river. Nope, there was no gold nugget in that one. Let me just go do it again. It's an inefficient way of your time. You're better off to look exactly like what Brandon said and try to find those properties. For the person who are saying if it doesn't cash flow, don't buy it at all. My thought would be, if you're spending $3,000 a month, $2,500 a month on rent, you're already losing money. If you buy a property that you lose $1,000 a month, but it's saving you $2,000 a month in rent, it's like cash flowing $1,000 a month. To go back to house hacking, this is why it is so powerful to house hack, because if you're spending money on your rent, you are throwing away money already. And often, like what you dub the sneaky rental tactic, when you do exactly what you said, you buy the property, you turn it into more units, you live in one of them, you sacrifice your comfort, you get it in good real estate. Well, then when you move out, it often does cash flow, the unit you were living in. And then you go put 5% down on your next primary residence property. And you can do this every year for 5% down forever. At the end of 15 years, you'll have 15 properties in some of the best neighborhoods you never could have bought in. You will have never paid rent the entire time. You'll be a multimillionaire because you were less comfortable.
What opportunities do you see in the future, in meaning like macro scale? Like what's going to work in the future that you think real estate wise?
I think we've been thinking offensively for the last 10 years, because you could make so much money just buying real estate and inflation carrying it up. I don't know. I just want to come out and say I don't have a crystal ball. I don't know any of this. I could very well be wrong. My gut tells me, looking at this data, there is nowhere to put money that isn't real estate that keeps ahead of inflation. Can anyone in here go buy bonds and beat inflation right now? Isn't that crazy that banks went out of business because they bought too many bonds? It's like your kid got sick because they ate too much broccoli. The safest move you could possibly make ended up being risky because we raised interest rates so much to try to fight inflation. Can you go buy mutual funds and beat inflation? And I don't mean the CPI. I mean, like, we printed 80% of our money supply over a 2.5-year period. All of the investment options, for the most part, except for a handful of stocks, if you're maybe really good or you get lucky, are gone, other than real estate. Real estate's the only place to put your money. And then when you work in the tax advantages, the equity growth, the way that you can add value, you can force it. If you're good at investing in real estate, that's the only place to put money, period, that can beat inflation. So there's so many people that are competing with us for these assets. And if we walk in with this attitude, like, I need a 10% cash on cash return from year one or I'm not going to buy it, that's fine. Blackstone will buy it and they're happy to break even. We were making fun of them 10 years ago, buying houses at auctions and overpaying. How many people didn't want to buy a house in 2014 because it was appraised at 400 and you had it under contract at 410 and you walked away and said, I'm not dumb, I'm not going to overpay.
A lot.
You just walked away from hundreds of thousands of dollars over your ego, oftentimes, right? So I'm more worried about, if you don't get real estate now, you may never get it. There may come a point where only wealthy people own real estate, and we get to a situation where what you own is what you're going to have, and the work you did in the past is what you have going forward, and there's not opportunities everywhere like there are now. I recognize that's bleak. I hope that's not the case. I'm not advocating for that. It looks to me like we've made so much money. The money needs a home. Is it hard raising money in the last 10 years?
It hasn't been.
No, it's been the easiest thing ever because there's so much of it that it has to find a place to go. Real estate and tech companies were the place it was all going. Angel investors have sort of stopped moving in the tech space as much as they were, and guess where that money goes? It goes into real estate. I'm more worried that we're going to be pushed out of the world that we're in than we're going to have a big crash and there's going to be tons of free properties and it's going to be a free-for-all. It's hard for me to see that happening again.
Yeah, same.